Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your weekly technical analysis of New York and London coffee markets.
New York coffee. The pipe top formed on the 9th and 12th of September were the direct triggers for the move lower that we've seen since. The actual pattern that set us for the move lower, the lopsided diamond pattern, and that's seen disappearing in the top left of the daily chart and highlighted in dark blue, is huge. I'd previously given a primary target for this in the 166 3/4 area, with a secondary harder achieved target X1 in the 142.40 area. The primary target was achieved in early November, and the harder to reach secondary target X1 is at the bottom in the bottom center of my daily chart. We came close to it. I said at the time when I indicated these targets, many months ago, and I quote, "Needless to say, given the size of the lopsided diamond pattern, these proposed targets below, assuming the break lower holds, are some longer term targets. Given below, assuming and I also continued, and again I quote, there is one other fly in the ointment, perhaps, just perhaps, the lopsided diamond pattern is becoming a big bear channel. If that to be the case, then the first area to look at below would be the lower bear channel line of such a pattern. That's currently 162.55. End of quote. The extension of this bear channel is highlighted in bright green on my daily chart, and the lower bear channel line has played a significant part in recent actions. Interesting more as a resistance once it had been broken than anything else, though I still believe the core of the real resistance was and is the nearby 50% Fibonacci line, the May 19 to February 2020 move at 174, which I've highlighted in purple on my daily chart. Below these we've seen support from the 2017 high at 159.30 plus a combination of lesser Fibonacci lines at 153.60 and the May and June 2021 congestion at 153.30. Well, all these eroded the fall and prices seem to halt their move lower and head somewhat sideways. I spoke about this action in early December 2022, that perhaps all this drop and sideways action may be turning the market action into a descending scallop pattern, especially after looking at London coffee, where this seems a reasonable idea. Well, I still hold to this idea, which may surprise you, but I'll explain shortly. And though the fall since the start of this year was in line with the bearish move to the descending scallop pattern, including my laying out the primary target X in the 128.5 zone, and a secondary harder to reach target, a much harder to reach target X2 way down in the 78.5 zone and off the bottom of my daily chart. Despite laying these targets out, I still hold the idea of a possible descending scallop pattern, as this pattern can also have an upward breakout. But, and it is an important but it will depend on what the market does should it get to the key 50% Fibonacci line of the May 19 to February 2022 move at 174 even. For the moment, I'll leave the targets where they are below, but they could easily be retired on confirmed moves higher over the 50% Fibonacci line. This leads to an interesting potential pattern that may happen by the end of tomorrow. That is Tuesday the 31st of January. You see, we are awfully close to making a monthly key reversal here. Prices only need to reach up just over 174.40 and would have set up the conditions to have a monthly key reversal for January. The problem is they have to do it by tomorrow's close of business, which I think is a big ask. But I'd rather draw your attention to the possibility of such an action than just keep quiet. London coffee. The lower time, currently 1686 of the late December 21 to mid-July 22 bearish Andrews picture, which I've conveniently highlighted in dark blue on my daily chart, was where the current rally started back in mid-November last year. We've seen the market since then curl upwards, show some indecision, especially just over the 2018 high at 1845 and under the congestion at 1897. Until in the second week of January, we saw a weekly key reversal up that punched up through the congestion at 1897. Thus we come to my commentary from 8 weeks ago when I put forward a new suggestion what may be happening. You see, looking here and a little also at the New York contract, I had and have a suspicion that the action since mid-October may be a descending scallop pattern, sometimes called a backward letter J pattern. Here on the London contract, especially on the London contract, this pattern has merit. So here is just the primary targets both above, as we seem to be having a follow-through higher now, but just in case I've included a primary target below as well. Okay, so top side, a primary target X would be in a 2095 area. This is a doable action, especially as prices have pushed up through a lot of resistance. That is now support, starting from the middle time, currently at 1930, as well as the separate congestion at 1945 to 47, and more from 1968 up to 2004. That's 2004, the price. We're now approaching a super significant resistance, the long moving average. Finally, there is the potential topside secondary target, and that's quite a way away. Target X1 is in the 2280 area, where the 2017 high is. And upon reflection, for the moment, I think I will leave off putting the targets below for this pattern, just for the moment.
Thank you for listening. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and the back of this broadcast. Copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.